Asset allocation, diversification, again, we've got three things there. What you're typically going to see a good portion of the dollars invested in is going to be a more actively managed approach. We get to see with where the economy is today, we want to be wise in where we're invested. We're not looking to just take the exact same risk as something like the S&P 500. We do feel like there are certain pockets of the economy that are undervalued, and we want to be really strategic in taking advantage of that. Mm-hmm. That's going to be more of your exchange traded funds and more of your public equities that you're going to be invested in for that sleeve. We also know that you can be invested in things like structured investments that provide an opportunity for you to mitigate risk on the downside. We really like to do that in a way that is mitigating that risk on an annual basis. Mm-hmm. So being able to, in a 2008, 2009 like scenario, really reduce, if not eliminate, some of those big losses, because the reality is these big losses are going to hurt worse than big gains are going to help. If you have an account that lost 20% in a year and made 20% the next year, you still haven't gotten back to where your principal investment was. And so it becomes important for us to have a way to mitigate that risk, but do it to where we can also be saving from fees. That's something that we want to be really smart about, as well as how do we do this in a way that is cost effective for clients. And if we can be saving fees, which a lot of these structured investments provide, well, then that's something that we want to be including in our planning as well. And then lastly, we've got other forms of what I would call alternative investments that are more predictable in nature. They may not fit into a classic, again, stock or bond type investment, but it does provide opportunity for maybe something like very, very consistent cash flow in a way that we see as really risk adjusted. And so all three of those combined allow us to live into that asset allocation, diversification framework. Again, also feeding back into the time horizon diversification.